A new report about CEO pay is making headlines, again, and highlighting just how much more CEOs make than the rest of us, again. And it's record-breaking, again.
It's disgusting now where the pay equity is.
Nobody really needs all that money.
At this point, eat the rich, just eat the rich.
But what does this report tell us about how CEO pay works and why it's rising so much, even as, and sometimes especially when, the average Canadian is struggling to pay their bills? Okay, it's hardly surprising that CEOs make a lot more than the average worker. But that gap between what the top CEOs earn and what the average worker makes in this country is growing at a shocking rate. So let's look at this year's annual report from the Canadian Centre for Policy Alternatives, which classifies itself as a research institute focused on social, economic, and environmental justice. These researchers found the average working Canadian made around $60,000 in 2022. That's with an average raise of 3% from the year before. The top 100 CEOs, on the other hand, made on average a staggering $14.9 million, an all-time high. And that's with an average raise of $623,000 from the year before, or a 4.4%. That's a big gap, $60,000 to almost $15 million, and kind of hard to comprehend. But think of it this way, it's 246 times more than the average person. Check out the top 10. These executives all made more than $20 million in the 2022 tax year, according to the report.
It's absolutely enraging. I mean, we're living at a time where the cost of living has been very challenging for most Canadians in terms of, now what they have to pay for their homes and their mortgages. And then in the middle of all of that, we have, CEO pay running away.
And things get even more stark when you factor in inflation, which was 6.8% on average in 2022. In real terms, that means the average worker actually took a pay cut of about 4%. Of course, inflation affects everyone, including CEOs, but it doesn't affect everyone the same. The report puts it this way. The headline inflation figure is much less relevant for CEOs since they are unlikely to spend their entire pay package, and they certainly don't buy the same goods and services as average Canadians.
It appears many Canadians have racked up costly debt.
It's just ridiculous. Housing is too expensive, food is too expensive, childcare is too expensive.
And here's the thing, this isn't just a blip. CEO pay has been rising steeply over the last few years. Look at this graph. Back in 2008, the top 100 CEOs made $7.4 million on average, half of what they made in 2022. And since 2008, it's been a pretty steady incline. And nothing, not even a pandemic or a slowing economy, has stalled it. In fact, it's accelerating.
There is an underlining of this story, Hillary, and it's the same one every year, that the rich are getting richer.
CEOs often make a salary, but usually it's a fraction of their overall pay package. The way that it's laid out in the CCPA report shows the average salary for these top CEOs was about $1.2 million in 2022, but their average total compensation was, as we said, $14.9 million. And that's because a huge percentage of their income came instead from what's known as incentive pay, things like profit sharing, stock options, and bonuses. Bonuses are a pretty universal mechanism used to incentivize good performance. For CEOs, it's generally tied to their company's performance, things like revenue and profit. In the very simplest of terms, higher revenue and profit usually mean CEOs take home more. Now, it's important to note that most regular workers also get non-salary benefits too, including bonuses. And those weren't included in this report.
What is happening is that wages as a share of total compensation is actually falling. People get more fringe benefits in the form of insurance, in the form of flexible hours, et cetera, things that employers pay for, but are considered compensation.
But the average bonus for a regular worker is certainly not over 80% of their salary. In many cases, it's more like 10%. If you live in Canada, the last couple of years have been pretty rough all around.
The Bank of Canada has raised its benchmark interest rate.
Growth in Canada's economy is slowing down.
For the third consecutive month, the unemployment rate rose.
It seems a bit counterintuitive that a struggling country would produce record-high CEO bonuses year after year. But there's a lot of factors that play into this behind the scenes, most notably over the last 2 years. inflation.
Inflation in Canada has hit 8.1%, higher than at any time since 1983.
Companies across Canada have raised their prices substantially over the past few years. And some of that was needed to cover their own costs, because they too are paying more for things like energy and raw materials. But this report suggests those price hikes may have been above and beyond what was necessary.
CEOs and the companies have argued that inflation's not their fault. They're just raising prices because their own costs are going up. That's not what the data says.
That's David McDonald, the author of this report, which has been an annual look at CEO pay in Canada for about 15 years.
The data says profits are also going up, and they are being remunerated as if every dollar of these inflation-driven profits are their doing.
This report suggests many of these companies use inflation as cover, as an excuse to raise consumer prices even higher in order to bump up their profits. It's something politicians have also been concerned about, particularly when it comes to necessities, like food.
How much profit is too much profit? How much is enough? Like, you're making more than you've ever made ever, and you've not contradicted that point because we know it's true.
Reasonable profitability is an important part of operating a successful business.
And of course, as profits rose, CEO bonuses skyrocketed too.
This is largely a story about inflation, as it was last year. So inflation exploded corporate profits. They're at record highs. Profit margins are at all-time highs. We're just way outside of the norms.
But here's the thing. This report also shows even when companies aren't making record profits, bonuses for these top CEOs still appear to be on an upward trajectory.
This is the nature of bonuses, is they're one way only. They go up when times are good, and when times are bad, you just change the way they're calculated so that they don't go down.
Critics of the report, though, make this point. When things do go really wrong, CEOs are often the first to be fired or pushed out. So while their bonuses may not be shrinking, they're almost always at risk of losing their job.
This is what I did in my 2020 study, is look at the rate of turnover in CEOs. And for Canada, the first year after, 40% of the top 100 CEOs have been fired. Their pay went down massively once fired.
It's also worth considering the issue of supply and demand. How many people have the skills needed to make these companies competitive in a global economy?
Back in the 60s, you could find CEOs that were high school dropouts. Today, you find CEOs who have a larger share of CEOs have MAs, MSCs, PhDs in STEMs. So they're in harder sciences and harder domains. It's rare to find individuals who have multiple sets of skills like that.
And of course, the harder it is to find a competitive CEO, the more companies are willing to pay them. So as Canada continues to teeter on the edge of a recession and the economy continues to slow, don't expect CEOs to make any less than they are now.